Okay, order blocks. What are order blocks? Well, glad you asked. So if you go and look at price buying and selling, creating this push-pull narrative, you will notice that when buyers overpower the sellers, price shoots up. When sellers overpower the buyers, price shoots down. All of the buying and selling that happens right before that liftoff creates what's called an order block. That's a good way to think of it. So the last up candle before this down move is marked as an order block. I've marked it here. I have these breaker blocks highlighted for you by my NAMI SMC Pro indicator. I think it does a really good job with highlighting these breaker blocks, and it gives you the volume information inside those breaker blocks. We'll get into that, but I just want you to see it. I'm saying it first because you're going to see this one disappear soon, I believe, because once you mitigate a level or an order block or a marking on your chart, mitigated means you have used it. Once you use it and it disappears, the indicator takes it off so that you're no longer seeing that. Now let's talk a little bit about these order blocks. So how you can mark your own. So let's delete this one and let me show you how to mark this from scratch. And I'll go ahead and turn off this, not to confuse you. Okay, I'll delete that one too. All right, so you want to mark your first order block. So let's just start here. You're looking at this move here. You know, everyone thought, oh, we're going up. No, we're not. We came back down. All right, what was the last up candle before that move down? It's right here. So you may see this brush tool when you go over here to your tool settings, your geometric shapes. Highlight the arrow, or click the arrow, and then go to rectangle. And you can draw your rectangle, you know, just up and down, and then you can actually pull this to the side. That's one way to do it. Select it again. Okay, hold down Command on the Mac. Select the wick, the full candle, the wick and everything. All right. I don't see my rectangle. Why is that? Well, the reason why is because you haven't selected this and pulled it across yet. There you go. So you need to learn that. But when you use your Command key to lock it to the candles, a lot of times you're only going to see this first. And you might be thinking, oh no, where'd my square go? Where'd my rectangle? So just pull it out. There you go. The other thing is you need to save a setting. So double click the edge of it when you have these blue boxes. Because if I just double click in the middle, it just opens and closes, you know, the candle area of my chart. It hides the indicators or brings them back. It doesn't actually select the box. You have to have the little blue corner grabber anchor things pop up. When those are illuminated, you can double click, or you'll notice this when you click once on the graphic or any indicator or tool that you're using. When you click it and select it, this pops up on your chart somewhere. This is another way to get to the settings. But either way, you're trying to get to the settings of this rectangle tool. Now, I'm going to go to my template order blocks. And I'll show you real quick. You can save these as your own templates. Once you get your settings right, you can go down to template and click save as and then name it whatever you want. I have tons of them. Okay, border, I turn it off. Background, I have it on this charcoal candle above the purple at 35% opacity. And then I extend to the right. See that? So for me, with this setting, what I like is if I go to order block, I'm going to draw it. I draw it here. All I had to do was draw the top and the bottom and snap to those points, and then my order block is there. I love that. And then in the future, when price action comes back through and hits this order block and ranges in it and then moves on somewhere else in life, I can just delete that one and say, oh, it's mitigated now. Okay, but anyway, so we drew a down move. The last up candle, we drew that order block there. Okay, let's draw another one. Let's look over here, this up movement here. Now this one's a little trickier. And it's actually a great example because your order blocks are not always just the candle on the time frame that you're looking at. So without going to any other time frames and getting too deep into this, sometimes your order block will actually be a range. It'll be something like that. But for argument's sake and just starting off and learning, because I'm going to show you something else that's pretty cool here. Let's do this last down candle before the upwards move. And it would be this one right here, because there's no down candle here, 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 all the way up to here. So this move that happened, that's the last down candle. Okay, so now you've selected that. If you drew this order block here and price action went up and you were watching all of this and you were thinking, I wonder if price action is going to come back down and hit this order block and mitigate this order block, you would have been right, because it did. It came back down. It's what we call a front run, where it doesn't actually touch the level and then it goes away from it, which would lead you to believe, this is a bonus here, because it didn't touch this order block and left from it, odds are, if we don't break the structure up here, price is going to come back down and actually get into this order block later on. That's a pro tip there that I learned from someone else. So I'm not a pro. I'm a nobody. But I love trading. So here we go. You would have been right. Price came back down and it came into this order block and mitigated it. Okay. So now I want to show you something else. I want to show you how imbalances can make one order block more important than another. Okay. So an imbalance, this is really quick. This is not a lesson on imbalances really, but just real quick. This is, this wick stops here. This wick of this candle stops right here. It creates what you can clearly see is a gap. And I'm going to just go to my template here, fair value gap or imbalance as it's known. And these are concepts that you will hear that someone created these recently. This concept was not recently created. These are concepts that are from, I would argue, the 1930s studying price action. But I could be wrong on that. But I will say that people were understanding these concepts for a long time. They get rebranded and they get recalled something new every so often. Smart money concepts have been around for a long, long time. We've just learned to call them certain things today versus what people were calling them probably 20 years ago. So anyway, here's fair value gap or imbalance, if you want to call it that, that's right above this order block. So you have this idea that this order block now has heavier weight to it. It's more important than others. So you see price action shoot off and you're thinking, wow, how can I not be a FOMO zombie and just buy in, thinking we're going to the moon? How can I be smarter than the rest of the traders in the world? Well, if you see this imbalance with this order block, you can think, I'm going to be smarter and wait for price action to come back down here, and then I'm going to long. And of course, set a stop loss at some of these lows here. You'll have to subjectively decide where you want to set your risk management. Always use stop loss. Always use risk management. You have to learn this. This is how you can be profitable 50% of the time and actually be profitable. Meaning your win rate could be 50% of your trades, 5 out of 10. And if you set a stop loss, you will be profitable. Isn't that amazing? It is. So an imbalance that's next to an order block gives more probability to that order block than others. It doesn't mean we can't just shoot right back up here and go to this order block. But I want to point out something here. There's an imbalance here. And maybe you'll see this before I draw it, before I finish it out. I'll stop right there. So there's a FVG right there, fair value gap, imbalance. Price shot down. It went to this order block and then came back up. Now, if we front run this order block, meaning we didn't actually touch it, and price is going to come back down later to it, where do you think price is going to turn around to come back down? It's going to come up to rebalance this imbalance, and then it's going to turn around and come back down. Now this is where I want to show you another little trick with order blocks. Okay, so things called breaker blocks. Breaker blocks are high volume order block areas that price action shoots through really quick the first time. And then when it comes back to it, it finds resistance or finds support. And that's where price rejects from. So I can use my indicator here, and I believe it's still going to have it listed. So my NAMI SMC Pro indicator does an amazing job at highlighting breaker blocks, and it gives you the volume in those breaker blocks. I highly recommend it. Anyway, so this order block here, the last, well, this is actually not the last down candle, but again, like I said earlier, how a range can be an order block. So this whole area here is actually created as a ranged order block. But for argument's sake, let's keep it simple. Notice the NAMI is selecting this. You probably would have selected this right here as your order block, but that still would have been correct, because look at this. Even if you only did this and then pulled that across, that's where price action cleared this imbalance and it rejected from here. So even without NAMI highlighting that for you, it still did exactly what you would have expected. So price came down, front ran this, did not touch it. So we're thinking it might come back, but then it shot up. So this narrative that we're going to come back here is still true. Comes down, you could have taken a long there, and then you could have saw, okay, we're coming back up into resistance. And then when you saw that we had a breaker block here with high volume, and price starts to turn around here again, then you had a high probability that you're actually going to go enter this order block on the next move down. So this is how scalpers would do an amazing job of buying in here, setting a stop loss. Price runs up, they get out. And they probably would have gotten out somewhere around here because, again, you're looking at an order block over here. I'm just trying to give you real applications with these. So let's say you had this marked as an order block somewhere in there. Okay, so when price got to here, so there's some people who will trade literally order block to order block scalping. So they would buy in at this order block, have their stop loss down here. They ride it up. It breaks through all of this ranging supply and demand resistance here. Once it broke through that and broke out and broke this market structure here, they're riding it up and they're looking to take profits here because they see all this structure here is also resistance. Another lesson I'm going to give you, I'm going to make a video on ranges, but ranges are like high traffic areas, so we'll get into that. But for now, view order blocks as places where buying and selling, like traffic stops. So when price gets to these areas, you tend to get an accumulation or a distribution, and price will turn around or pivot from there. So understanding this concept is powerful, and then your imbalances being close to order blocks make those order blocks more significant for you to watch for support or resistance. And then when price breaks through an order block and comes back to the order block, you can view it as what we would call a breaker block. Now, this is just the simple getting started concept of this. And again, there's different indicators out there. I really highly recommend the NAMI SMC Pro for this. The way it tells me the volume inside that order block, which became a breaker block, is very, very powerful. So if I was scalping this currently, which I'm not, but if I was, that would have been a huge indication that we were going to go back down. And then I would have entered somewhere in here when I saw this fair value gap get mitigated, and then price goes back down. I would have scalped it somewhere around here. What would that have been? Let's just say, and don't do this. Don't go, oh yeah, you could have gotten a 6% move. Nobody catches it completely from end to end. That's very, very difficult. Some people do. Some people do. Some people had this level marked. They knew to set a limit order for a short, and then they wrote it all the way down to here, and they, using other indicators. They saw possibly a sell dot or whatever it was, this money flow crossover, and then decided to get out, let's say. Anyway, but the point is, most of the time, you're not going to catch the full move. You're going to catch pieces of it. It's going to be something more like this, 3 to 4%. But that is an amazing move. With 3x leverage, that can be an amazing, powerful move. And I never recommend high leverage. And none of this is financial advice, by the way. But I hope this lets you see the idea of breaker blocks, order blocks, how to mark order blocks, and how an order block extended with high volume through can become a breaker block for price action to reject or bounce from. And then let's just pull back a little bit here and zoom out. NAMI also has a high volume breaker block for down here. Price action didn't close. It wicked in, but wicked back out very quickly. So the indicator is keeping this on as a breaker block. And because we broke through this one pretty good, I mean, it is building some traffic here, but we broke through that order block. There's a high probability that we could drop down and wick to this area. And if we do not close a candle here, I believe we would wick here and then work our way back up. One last little golden nugget here, a liquidity grab. When you see price action curve up, we call this liquidity zones. There's a lot of liquidity down here. So price will wick down here to go clear out that liquidity. You could think of it this way. There's a lot of buyers that have put orders in that have not been hit yet. And so when this comes down here, it cascades down really quickly to fill all those orders and then shoots back up. Yeah. So enough yapping for me, but that's the basic idea of using order blocks and breaker blocks. All right, guys, have a blessed day.